So we're pretty regional focused. When we started, we picked three target markets that we liked. That was Columbus, Ohio, Greenville, South Carolina, Charleston, South Carolina. And then, after doing this for quite, really since 2013, when I made the transition over to Marcus, we've invested in a ton of different places. And early on, the market's been great, right? The market over the last 10 years has been phenomenal. So we've benefited by getting our feet wet and testing out different markets. But right now we are super focused in Jacksonville, Florida. We've done a lot of deals in South Carolina and North Carolina, but our big focus now is on MSAs of populations larger than 1 million people or right about 1 million people with really good economic fundamentals. So we're looking for a little bit of a bigger market. Our internal plan is to bring management in-house within the next 18 to 24 months. So we're looking to accumulate anywhere between 1,500 and 2,500 units in Jacksonville, Florida, Columbus, Ohio, major metros. And then we could branch off out there, within like a 60-mile, maybe 120-mile radius of, these bigger markets.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello, welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have John Cohen of Toro Real Estate Partners. But before we get started, if you like this podcast, please like, share, and subscribe. And also, we love your feedback. Please let us know in regards to any future guests and topics. So let's get started. John Cohen, co-founder of Toro Real Estate Partners, was co-founded in 2015. He is the strategic director of the company, formulating the investment strategy, investment development, and acquisitions and dispositions. He's been investing since 2010 and has surpassed the 3,000 unit mark for properties bought and sold. How you doing, John? And thank you, and welcome to the show.
No, I'm doing good. Thank you, Dwayne, for having me. It's I appreciate you asking me to come on.
Absolutely. Yeah, me and you have a lot of similar backgrounds. I understand you as a broker for Marcus Millichap. I also have a brokerage division as well, so we kind of have some similar synergies as well. But for the people who are not familiar with your background, would you mind kind of sharing a little bit about your backstory and how you became and got into real estate?
Yeah, so I actually started my career on the financial side. So when I got out of college, I played baseball in college, and when I graduated, I got injured my senior year, sort of at the end of baseball. My mom actually at the time said, you got to get a job. You can't just do nothing. Like it's, baseball's over. Like now it's time to, start life. So she actually gave me a newspaper clipping. So I called it up. They were looking for, employees or employers. So I called them. They said, come into the interview. I sat down, and it was a financial advisor, stockbroker, regular office. I sat down with them, and his exact word at the interview was, if you're looking to cure cancer, this is probably not the right job. But if you're money motivated, you could start on Monday. And I was like, all right, let's do it. So I spent about give or take 3.5 years there. I started at a small shop. I worked my way up. I ended up getting hired at Morgan Stanley. And the day I got the job, it was an 8-month interview process. 8-month interview process, rigorous, up and down. They said, you're hired. You can start tomorrow. I came into the office the day Facebook IPO'd, and the IPO Morgan Stanley underwrote, and it didn't do well. So I just saw like utter, people's lives were over. There are people disappointed. And I sat there and I said, I don't want to do this. So I got hired, quit the same day. And in that whole period of time, I was reading a lot of books on real estate. I bought some small tax lien stuff on my own. I was doing some stuff here and there. And I said, you know what, I'm going to quit. I'm going to become a real estate investor. Which, I quit cold turkey, and then I started going down that path. Real estate investors, I realized really quickly that you don't make a lot of money day one. So I ended up getting my license, started doing residential transactions in the city, rentals and sales, turned that into, went on to the commercial side, which I was always passionate about in real estate. And that's when I interviewed at all the shops, Cushman & Wakefield, CBRE, JLL. I interviewed everywhere. I picked Marcus & Millichap because it had more entrepreneurial side to it. I wanted to do industrial warehouse conversions into condos, but my manager convinced me that multifamily would be not easier. It would just be quicker transactions. So started doing investment sales at Marcus & Millichap in Brooklyn and Queens, New York. I was there for a short period of time. I fell in love with the business. Through that period, I had done a ton of fix and flips. I owned about 150 houses in Pennsylvania, bought through tax auction. So Marcus & Millichap was the platform for education for me. It really taught me how to underwrite deals, how to interact with sellers, so on and so forth. And then I just, sort of parlayed that experience up. I started calling Marcus & Millichap brokers outside of New York where I live, and tried to, I started offering on deals, ended up sending out a direct mail campaign and offered on a 48-unit building in Columbus, Ohio, which is the first property we bought back in 2015.
Oh, wow. So as far as like I know you get experience with Marcus & Millichap and kind of work with sellers and working on contracts and was any other additional education that you sought out to kind of help you transition to actually buying and owning your own like larger deal?
Yeah, I think Marcus & Millichap was the catalyst. I did end up joining the community of, I actually host a monthly meetup event in Long Island that we do every month because I started going to a lot of RIAs, a lot of networking events. And I was at all these events interacting with a lot of people using the Marcus & Millichap Foundation, and then, meeting the right people and talking to the right people. I did have a mentor to sort of kickstart me because I needed that, for lack of a better term, maybe a kick in the ass. So I needed to make an investment in myself. So I sought out someone that was doing exactly what I wanted to do, who was actually introduced to me through an uncle of mine. And, still a good friend of mine today. I give him a ton of credit for my success because he was a catalyst, right? I had the Marcus & Millichap background. He was sort of that accountability partner that really laid the foundation down, which springboarded my career. And I give him all the credit in the world, and I appreciate everything he's done for me. He doesn't coach anymore. He doesn't mentor anymore, but he was instrument part, integral part to the early on success. Now, could I have done it without him? Maybe. How long would it have taken me? I don't know. Marcus & Millichap was a huge springboard, but that was like the gasoline to the fire.
Mm-hmm. Yeah, the reason I was asking, because like every time I interview other successful real estate investors, they always have like this process that they went through. They get this aha moment. They start getting curious. They're reading books. They start testing the waters themselves. They see, they find other successful people either through books or courses or, direct mentorship. And then they are able to springboard and either cut that time if they was doing it themselves and cut out all the mistakes and just actually get that action, that little kick in the butt to get started. So that's awesome. That's really awesome, man.
Yep.
So the deals that Toro's working on now, you guys, is it over 3,000 units? And then
yes, yeah. So we have we bought and sold over 3,000 right now. I think currently under management it's around 1,600. Nice. We just sold 160 units in Charleston, April 1st. We just closed on 104, 128 units in Jacksonville on the 29th of March. We have a 320 unit in Jacksonville, Florida, closing on Friday of this week. And we also are selling our 453 unit deal in Jackson, Mississippi that just, should go to contract today. They're actually starting due diligence today. So it's, we hover around the 2,000 unit space. We're always buying and selling. Our deals are typically anywhere between 24 months to 5 years. So, we're in that space. We've sold 8 deals and we've bought 18 deals. So, we still are operating about 10 properties.
Very cool. As far as like the market, you mentioned Mississippi, Jacksonville, Florida, other parts. What other markets are you guys invested in right now?
So we're pretty regional focused. When we started, we picked 3 target markets that we liked. That was Columbus, Ohio, Greenville, South Carolina, Charleston, South Carolina. And then, after doing this for quite, really since 2013, when I made the transition over to Marcus, we've invested in a ton of different places. And early on, the market's been great, right? The market over the last 10 years has been phenomenal. So we've benefited by getting our feet wet and testing out different markets. but right now we are super focused in Jacksonville, Florida. We've done a lot of deals in South Carolina and North Carolina, but our big focus now is on MSAs of populations larger than 1 million people or right about 1 million people with really good economic fundamentals. So we're looking for a little bit of a bigger market. Our internal plan is to bring management in-house within the next 18 to 24 months. So we're looking to accumulate anywhere between 1,500 and 2,500 units in Jacksonville, Florida, Columbus, Ohio, major metros. And then we could branch off out there, within like a 60-mile, maybe 120-mile radius of, these bigger markets.
Yeah, that's very cool. And yeah, it mentions regarding the self-management, because I know a lot of syndicators rely on the third-party management companies, and you guys are kind of organizing it based off of your acquisition strategy to kind of build around. That's pretty cool, because I'll go right to your bottom line as far as returns to your investors.
Correct.
Yourself. So yeah, I'm seeing a lot of people from the coast. I'm here in Connecticut. There's a huge migration out of the state. So you guys are identified, like I said, Jacksonville, and all these in the Carolina markets, and that's pretty cool. Could you just kind of explain for our investors that are new, that are looking into those markets, what are some other stuff that that they could look for in a marketplace that are attractive so they can invest in?
Absolutely, it's a great question. So today is actually our monthly meetup, and we're actually doing market selection. So this is a perfect question, because I'll be speaking about this at about 7:00 tonight at our event. The big things I tell people all the time, we're multifamily focused. So if you buy industrial or retail or, whatever, this may not go for you. And I don't want to pretend like I'm an expert there, but on the multifamily side, the biggest thing that you could look for is job growth and population growth. Where jobs are being created, people are moving. Where people are moving, they need a place to live. So the one thing that we look for is, 5 years of job growth and what it has done. Has it been going up? Has it been going down? Is it stagnant? Can you see trends of jobs being introduced into markets? So job growth is the biggest thing in the world when it comes to multifamily. And then the second, 1A and 1B would be supply and demand. There could be a lot of job growth, but if there's overbuilding, maybe the market won't support it. So the two things that we look for in any market we go into, a good supply and demand and a good job growth story. Make sure that the local economy is doing something to incentivize jobs to come in, making sure that there's a lot more demand than supply. Those are the two big things. The other things we like to look for are markets that have diverse employment. We don't want one-trick pony towns. We want it to be 100% based on oil or 100% based on steel, or we want good diversification of jobs. We also like markets that have good recession-proof jobs, like hospitality, medical, education, state capitals. They're typically pretty resilient when it comes to recession, but at the same time, we don't want it to be heavily focused on that. So we like good job diversification, very good supply and demand, good job growth, good population growth. And then we like, we buy a lot of C and B properties. So what we like is a nice rent delta between Class A and Class B and C. So we don't want to be, if Class A apartments are renting for $1,500, we don't want to buy Class B stuff at $1,400 or $1,300. We really like buying properties with average rents between $600 and $1,100, and where we can take those rents from $600 to $1,100 to either $800 to $1,300. That's and the $1,300 is on the high end. We are looking at some deals like that, but for the most part, we like to buy properties that are where you have a good rent pop, but you still have a nice 20-30% cushion before you get to the next tier of property.
Absolutely. Is there any tools or platforms that you guys are using to help you, gather this data, market research, and find these little pockets that are as interesting to you guys?
Yeah. So a couple of platforms and tools we use. We do use CoStar, partially because my partner was a Cushman & Wakefield broker, and he has access through the office. We use we'll test a lot of stuff online. There's always guys trying to sell some product, and we'll give it a shot, hopefully get a free trial and see how it works. The other thing that I think is underutilized that people don't talk about is using brokers, managers, and local local people in the market. Brokers have access to all the data you need. You can't just call a broker you've never met and say, hey, send me a CoStar report. You can, and brokers will. But, you got to add value to get value. So, we rely heavily on the brokers in the market. Not necessarily that means we're going to list with the broker or we're going to buy from a broker. But, we want to make them know that we want to be a competitive force in that market. So we rely heavily on brokers, managers as well, third-party management in markets. They know the good owners, they know the bad owners, they know the good parts of town, the bad parts of town. So, we'll when we go into a market, we meet with 3 or 4 different managers. When we started, now we have the management companies we use, but we meet 3 or 4 of them and we do a market tour. So, hey, let's start at the north, work our way south, east, and west. And, where are the good pockets? You don't want to be in this zip code. This is a great zip code. There's a lot of jobs over here. So, the managers and brokers are excellent. All the online tools work. There's no one that is like the magic silver bullet that we use. And then the third thing that I don't think anyone really talks about is, walk into the local convenience store, walk into the local Dunkin' Donuts, walk into the local deli, walk into the fire department, the police station, and talk to the people that live in the market and say, hey, what have you seen going on here? Is there growth? I see a lot of new houses being built, and they're going to give you the day-to-day boots on the ground that we talk about all the time. We pull into a property. If we see a tenant, we jump out of the car and say, hey, how do you like living here? What do you like here? Where are the areas you want to go? Where are the areas you visit? And that's going to give you the real local knowledge that I don't think, it's better than anything you can do online, better than any report you're going to get. It's coming right from the source. Yeah,
you'll get unfiltered, direct to the source information. I mean, they have no reason to hide anything. So, so they'll give you information. You're like, oh, yeah, this is somewhere I need to get away from, or somewhere like, okay, that's not so bad. So that's really good.
Exactly. Because all the reports online and all the data and all the software, all that, it's only as good as the information that the person puts in. So, we use it. It's necessary. I'm not saying to go out and spend $15,000 a month on research tools, but the local boots on the ground mom and pops are the best by far, at least is what we've seen.
Absolutely. As far as finding deals, I mean, of course, brokers, but I mean, ideally, you would want to get something off market or something that actively listed, so you get the opportunities there. Are you guys implementing any off-market type of strategies, or are you just kind of relying heavily on brokers?
Yeah, so the two that we, this is part of my broker days and, my days at markets and even my single family world. We do a ton of direct mail and a ton of cold calling. On the multifamily side, the space that we play in, 100, 200 units plus, it is more institutional, professional run. So it's a little bit harder because you're dealing with more of a, let's say, a sophisticated seller. Mm-hmm. So, they get a direct mail, they may throw it in the garbage. So I tell we have 3 people in the office now that really run the campaigns and do all the calling. It's consistency and follow-up. But we do direct mail, we do cold call. I would say that our deals have been bought 60% brokers, 40% off market, maybe the 60% of the broker deals, 70% of those deals were, pocket listing, maybe, whatever, we all, both of us former brokers, you a current broker, they're sending it to everybody. They're saying it's special, right? So who knows how accurate. We have bought regular marketed deals as well, but for the most part, we're pretty focused on, putting different fishing lines in the water and seeing what bites. So we'll test a little, we'll test a lot of stuff out. We've also relied heavily on management in markets. So, we'll call managers directly and ask them, who's your worst property? What's the worst property you have? What's the worst owner you have? And see if we can, shake a tree there. So we try a little of everything. There's no, just like the research reports, there's no silver bullet that's going to, the tell all be all, brokers are the best, direct mail is the best. You got to do a little of everything, I think.
Yeah, absolutely. So you guys are targeting 100, 200 unit deals. You find them in a really good location. It has all the kind of characteristics of a good market. You can improve it. So are you seeing the deals that you're acquiring, is it more managerial, or is it strategy, or is it like deferred maintenance, or what are you guys seeing?
Yeah.
What you have to do with it?
That's a great question. So we started on the heavy lifting stuff. So we bought a lot of properties that were in pretty much disrepair. that we were able to come in and fix all the deferred maintenance. Like the deal we're selling in Mississippi, it was beat up. We came in with about $4 million and really fixed the problems. Now we're selling it to a group that's going to finish the interiors. We've been a little nimble. I would say you got to be a little flexible in today's market, but our bread and butter is dilapidated properties that we could come in, and get them rentable, and then sell them to the next guy that wants to take it to the next level. Mm-hmm. But in today's market, one thing that we really like is long-term ownership, where we could come in, buy it from a long-term owner. It doesn't necessarily have to have deferred maintenance, but we just feel like if someone's owned a property for 5, 10, 15, 20 years, there's typically other ways to improve value by bringing in professional management, really, kicking into the professionalism, as opposed to going in there and, saying, oh, we're going to spend $5K a door and raise rents $100. We do look for deals that have not been renovated, nothing's been done. So we could come in and put an influx of capital to really make it stand out, but still be in a really nice rent, affordable rent range.
Is there any things besides from, maybe just doing some cosmetical renovations, or you guys maybe improving the management software as far as like efficiency, like instead of them calling the property manager, they can kind of file it online? I used to work with Yardi a lot, so I don't know if that's something that you use to kind of skim off more dollars off the bottom line.
Yeah, so we do. Our Jacksonville sites, we convert everything to online, or we do the best we can. Some other markets, it's hit or miss, to be honest. Some tenants, I don't want to say it's a training period, but it is. You got to sort of teach them the rules. Yeah. So the quick answer is yes, we do like to try and make life more efficient for tenants and see how we can do that. Because, we had one property where it was an older demographic, so we put computers in the leasing office. So when they came into the leasing office with questions or comments or to pay their rent, we literally had our manager help them sit down at the computer and start learning how to use the computer there. So they were able to then transition to the online payments, the online work orders and stuff like that. So we do implement it where we can, but it's all what the market can take. So you gotta pick and choose your battles. But yeah, we do. We definitely try it. Jacksonville, we've almost got all tenants on electronic payments there. So that's really, really efficient and really nice.
Yeah, so that's a good tip there. Because like I say, you have to base off the market. I've been in projects where we tried to implement that, and it took too long and actually added more strain onto the property manager that we end up had to reverse course and do something else. So yeah, it's definitely, that's a good tip there to make sure that you understand your profile of your tenants and the building and stuff like that.
Exactly.
As far as structuring your deals, are you guys sourcing the deal, funding the deal, getting the investors? Are you also JVing with other sponsors that find a deal in another marketplace and then you guys work together? How do you guys structure your deal?
Yeah, so that's a great question. Because we're not institutionally run and it's myself and my partner, we're in charge of day-to-day, every decision. We are extremely flexible. We have some deals where people have brought us opportunities where they didn't have the cash, where we've been able to put the cash in and, JV with them. Now, we're going to dictate terms, but we've done all of it. So, we're doing, acquisitions ourselves. We raise all the money, we get the finance, and we do the deal with our own investors. And then simultaneously, we are very open to, local sponsors or sponsors in general bringing us opportunities where maybe they fall short on financing, or they fall short on equity, or they fall short on track record, and they need some help.
Yeah, that's one of the biggest things, because especially I have seasoned investors that are doing syndication, but also newer investors. I had that kind of question as far as, instead of them doing like a 10 unit, they want to go to a 200 unit, but they may not have the experience, so they have to partner up with a larger group like yourself to kind of structure that, and they'll put in their cash and help raise the capital and stuff like that. So that's pretty good.
Exactly. So we can do both.
As far as like raising funds from investors, I said you're doing like local meetups. There's any other things that you do to help bring in investors and stuff like that?
A little of everything. We'll try different types of events. Different webinars. Whole nine yards. There's no one thing that we do that is automatic. So you got to try a little of everything. Whether it's an event, you partner with someone that has a car dealership or a wine and cheese party, or a quarterly dinner for investors or something like that. So we'll do a little of everything, and we'll see what works and what doesn't.
Is it more, you say, other business owners, or more really passive investors, or self-directed?
It's everything. Yeah, it's everything. I mean, our best source of investors are referrals from our current investors for sure. Guys that have been very successful introducing us to their friends to invest with us. But we have, it's the full gamut. It's the mom and pop investor to the successful business owner to the brokers that, work at, the companies that they brokerage deals, but they have nothing to do with their cash. So, we have a little, we have a good mix of investors. About 453 investors, 206 of them are active that have physically written a check. There's another 200 plus that, it just hasn't been the right opportunity. It hasn't been the right time. So, we're still, fishing through those now.
Absolutely. You had mentioned that you guys are doing more longer term holds. Is it where do you see the marketplace now? So I know, people are buying them, getting them ready and then kind of selling them off. So where are you guys kind of in your stage of your company?
Yeah. So the first, I would say for the first, up until last year, we were typically, in and out, right? Buy a deal, get it rolling, 18 months to 24 months, sell it. But now where we are in the market, it's been a very long extended run. We've looked at deals, closer to 5 to 7 years is what we're telling investors, as opposed to, where we used to quote deals on 3 to 5 year terms. Now we're quoting them on 5 to 7 to just say, hey guys, don't expect your money as quick as you've had in the past. So do I think that those opportunities still exist? Absolutely. Right. There's always an opportunity to buy and sell a deal quickly if you buy it correctly. But we're definitely going into deals with a little bit more of a longer term horizon. So instead of trying to get out in 36 months, shooting for 7, try and sell in 5.
Absolutely. You had mentioned you guys kind of, pretty much open structuring different deals in different ways. As far as the syndications, are you also charging fees, or are you just straight JVing with your investors and that's how you do it that way?
Yeah. So we're typically, we're not regular sponsors, but we're not no fees whatsoever. Depending on who the investor is, we've had investors that, we bought a deal with one investor. He wrote the check. We did the work. We co-invest no less than 10% in every single deal. So we're not a regular sponsor that has no money in the deal or is putting the acquisition fee in the deal. We write our own check into every deal, no less than 10%, net of all fees. So, we have a $100,000 fee and 10% is $100,000. We'll put $200,000 into the deal. But we charge an acquisition fee. We charge an asset management fee, depending on how heavy lifting the project is, whether there's a construction oversight fee or, we'll bring in a third-party construction manager. And then, we don't have disposition fees or refinance fees. It's just depending on the type of deal. Every deal is structured a little differently, but we do have an acquisition fee. We do have an asset management fee.
It's kind of what your range is as far as what you guys are typically charging, or where do you see it in the marketplace?
Yeah, so it always depends on deal size. The bigger the deal, the smaller the fee. We're typically anywhere between 0.75 of a point to 4%. The deals that start getting north of 20 million, we're closer to that 1.5 range. The deals that are 3-4 million, we may be closer to the 4-5 range, 3-4-5 range. And then the asset management is anywhere between 1% and 2%. It just depends on what we structure with our management company. So we like to have our management company invest in the deal. So our third-party managers right now, we make them put some skin in the game. So they may charge a 3 or 4 or 5% management fee. What we'll say is, hey, listen, charge 3% instead of 4, and then we'll do an asset management of 2, but you'll get a percentage there based on the performance of the deal. So we try and get creative with our management to make sure they have some skin in the game, so they treat the property as just as if we were doing it ourselves.
That's a very good point there, and I haven't heard many people say that, as far as, because like I said, it's, you have a larger asset and you're relying on them to manage it properly. You have investors that's involved in there, so you have to make sure it's done really good. So having them have their skin and having being more included into the deal is a very good strategy to kind of get more inclusion there.
Exactly. And that's something that going forward, it's a must. We started early on not doing that. The 2 deals we just closed in Jacksonville, our managers contributed a significant amount of money. And then our deal up in Columbus, Ohio, working with them as well, same way. It's something that I think is extremely important to have your management company. They don't have to put $1 million in, but let them put something in that's significant, because then they'll, as a human being, you got to assume if you have money involved, you're probably going to care a little bit more. And it's not just fee based, and that's very important to us.
Mm-hmm. So as far as like number of deals you probably come across your desk each day, like what will you say kind of how many offers or how many deals that are, make sense for you guys to even take a look at?
Yeah. So when I started, deal flow is always the biggest thing, right? I talk about it all the time in the office. We have a Monday morning meeting every Monday talking about deal flow, what we can do to strike up deal flow. The more deal flow you get, the more selective you can be. And we don't have to buy 30 deals a year. We buy 1, 2, 3 deals a year. And that's really it. I mean, we sort of, are very selective. But we're typically seeing 3, 4 deals a day, maybe a little bit less than that. We're typically seeing about 5 to 10 deals a week, let's say. Mm-hmm. That's typically what you see. Sometimes there's an influx of deals at the end of the year. It may taper off. In the beginning of the year, you get a lot more. But, we're in today's market, a lot of the deals that we're seeing are completely overpriced. So we're offering, where we're offering today is different than what we used to. We used to offer on only 2 deals a week, but the offers were good, solid offers that were good. Now, a broker's looking for 35 or 50 a door, and 50 a door, they want 10 million, and we're coming in like 7.5 range. So we may just call the broker and say, hey, listen, we're shaking out at about 7.5 million. You want me to type up an offer or not? I don't know how the traction is, if it played out, if you got guys at the top, but we're offering on deals, just not as aggressively, because a lot more deals, over the last couple of years, 50 deals you saw, 1 deal you'd put in contract. Now it's 100, 150 deals before you put a deal in contract. So, we still are making offers. We have about 12 deals that we're underwriting right now that we're going to see how they shake out. But, I'm pretty skeptical that any of those deals are going to make sense.
So you find a deal, makes sense, you make the offer, it gets accepted, and you kind of go down there to do your due diligence. Say it's in the market, you guys are in New York. What is kind of your process of putting together like a local team, and any tips you can offer?
Yeah.
People local.
Yes, our management, we rely heavily on our management there. Our management has good contacts with all contractors, but what we typically do once we offer on deals without touring them. If we're close to the price that it'll get a deal done, then we'll go tour the deals. So, we'll make an offer. Now if it's a market we've never been to, we're not going to offer on that deal until we get into the market and understand the market. We typically do about a 200 property analysis on any new market we look at. So we'll pull CoStar, look at 200 units and start underwriting them as if they were for sale, just to get an idea what's going on. But when we get into a market, we do a full rigorous due diligence. We have all third-party people on site with us. We walk every unit. We bring, plumber, electrician, roofer. We bring everybody out, management. We do 100% lease audit, 100% unit audit. It's probably about a 2-3 day process. We walk every unit, either myself, my partner, or our operations manager. I may go down for 1 day, walk 50 units on a 300 unit property, but one of us will walk every single property, every single unit. We make sure we get through every single apartment, every single lease. And then, we'll digest it at the end of the day. We'll sit down with the management team. Okay, what's the assessment? Are we close to what we thought it was? Are we off? But, when we do due diligence, we do, we spend money making sure we don't make a mistake going in, as opposed to just taking someone's word for it or walking 20% of the units and they look really good and then stopping. So we do a complete overhaul, making sure that everything is as it should be.
There's a lot of moving parts that you were just saying, like the stuff you have to do. It said yourself, your partner, and you have an operations. Do you have like a larger staff that's kind of helping stuff out, or is it because you guys are just working on, a couple deals a year that you're able to handle in your office size?
Yeah, we're able to handle it. We have 5 full-time people. Myself, my partner, our admin, our administrative girl. Our operations manager is really just like an extension of me and my partner. He does a lot of the stuff that we do. And then we have, a new girl we just brought on who's sort of spearheading a lot of the acquisition side. She'll do a lot of the day-to-day cold calling, direct mail campaigns. She'll spearhead the acquisitions. And then our admin, or our executive assistant, she really spearheads, making sure insurance is getting done. She's really the one that facilitates the transaction. So she's on all emails. She makes sure that everything is, hey, the insurance has to be done by this date. Hey, you got to fill out this form. So we have a pretty good system in place. It's definitely something we're working on day in and day out. We just added another meeting to our calendar each week to we call it the Toro process meeting, where, each and every day, we want to make sure that our server, the folders are organized. And so we're revamping our processes and our company processes to make sure that everybody in the company knows this file goes here and this is what we do and this is who's in charge of it, just so to make it organized. Because, when we first started, you buy a 200-unit property, it's easy. It's me and my partner, we figured it out. But now, we're running 10 deals. We sold 8 deals. Out of those 10, we have 3 of them in contract to sell. We have property we're acquiring. So there's more balls in the air to juggle. So, we're still building that out to make it streamlined. And, we're not the most streamlined. That's the truth. I mean, I don't think if anyone says they are, they're probably lying.
Yeah.
We're always tweaking some business system to see how we can be more efficient. Even from investor relations and reporting, we try and do quarterly reports every quarter. Sometimes they come out, right on the 15th of the quarter, or sometimes they, maybe a couple days later, because a lot of the stuff we do ties to the management. If the manager gets us to report late, the reports come out late. So, we're working on it every day. I think that we do it well. I know that we should, there are things we can do better, but that's something that we are super focused on this year because the market's a little bit tighter. It's harder to find deals. And so we've been able to spend more time on business process and really make that an efficient system while we're still doing the offers, still buying property and selling deals. So luckily we've bought good deals. They've done well. So we've had, we have a little bit of a war chest of capital right now that we're sitting on, but it allows us to, really work on the business side of things.
Very cool. Very cool. As far as you said, are you handling underwriting or someone else that's handling underwriting? Or
our operations. Yeah. So the way that the system typically goes, the girl that's, spearheading acquisitions now, deals come in, whether they come to me or, info at Toro, or they come directly to her. She does the high level. She sends it off to the operations manager. The operation manager does a one-over and says, okay, underwrite this, underwrite this, underwrite this. They put together the little pretty package. They give it to me. I look at it, and then I'll do the deep dive dig, and I'll really scrub it down. Hey, I think the repairs and maintenance is high, or we're low, or, this vintage property. So I'm final say, me and my partner. They'll do a lot of the high level, they'll put it in front of my desk. I'll look at it and then, say, okay, let's offer on this one. Or, hey, I like it. I think offer's a little high. Let's drop it by $500,000 or something like that.
Are you just using basic spreadsheets, or you guys have any specific tools that you're using?
Yeah, we have a pro forma. We have a master sheet that we have. It's got assumptions, acquisitions, renovations. It's got all that. The honesty behind it is I'm a pen and paper guy. My partner spreadsheet to the nines. He'll build crazy spreadsheets with formulas, color coded. They look pretty. I take out a pencil and a paper and I just blast it on paper and we compare, and we're off by like $35,000. So it's a good balance. I joke around, what we do, it's not rocket science. We're not splitting atoms. We're not sending a guy to the moon. If our calculation's off, the rocket doesn't explode. It's relatively simple if you stick to the basics and you don't try and get creative. Don't buy something on some future pro forma that has no shot at taking place. You may have to take a little gamble here and there, or calculated risk. Gamble is probably not the right word. But in the end, we basically buy what's physically there or a direct comp. We're not going to reinvent the wheel. It's just not what we do.
Very good. Have you guys ever thought about doing like a fund, or just going to stick to just doing like a deal by deal basis?
Yeah. So the Jacksonville deals we just bought, it's a quasi fund. It's one LLC that everyone invested in that has an ownership in each property. So it's not 100% a fund, but it's like a quasi fund. And we've gone down the path, let's go raise a $20 million fund and go deploy it. Let's do deal by deal. It's weird because, when you go to the fund route, it's when you go down that fund path, it's like, all right, here's $25 million. And if you don't find a deal for 6 months, you're like, you're sitting there like, what am I going to do? So, we've gone back and forth. We haven't, I would love to do a fund, raise $100 million fund and, put a 3-year time frame on it to deploy it. But right now, we're sort of, taking we're rolling with the punches. I think that, I think we are leaning towards a fund probably here shortly, but, we're still doing deal by deal. We're seeing what works. We're gauging investor appetite and seeing what we can put together.
Yeah, that's good. Especially if you got the track record, so it'll be easier to kind of, even to get more capital in there as well. So can you tell us
Exactly.
about your meetup groups? Is it a weekly, monthly type of thing? And where is
Monthly. So so it's actually right in Westbury, Long Island. It's at the Holiday Inn on Old Country Road. It's right across the street from Roosevelt Field Mall, or right down the block. We typically, we'll bring in our accountants, we'll bring in our IRA specialty, specialists, we'll bring in our lawyer, we'll bring in brokers, we'll bring in, managers. We fly them in. It's 100% complimentary. We don't charge for the event. It's every month, typically right around the third Wednesday, give or take, just depending on, what the schedule looks like. And we talk about a topic like tonight's market selection. We may do, IRA investments. We may do, a CPA and structuring deals, finding deals. We typically like to just do something. It is a funnel for us, right? The purpose of the event is to bring people into a room to get them educated. We will never sell anything. We don't have a coaching program. We don't do any of that. We're actually just launching a podcast probably here in the next couple of weeks,
Nice.
But that is a platform for us to bring new people into a room every single month and give back. And then, if they come into that bucket, we know they're going to get our monthly email and so on and so forth. We're going to probably probably going to try and do a quarterly event. What we like to do, each of our monthly events is right around, you always have a holiday going on. So like in December, we'll do a Toys for Tots. So instead of saying, hey, give me $20, $30 to come, bring a toy. In November, bring canned food for Thanksgiving. So we like to, rotate the events around cyclical calendars and give back to people. It's something that we believe in, we support, and I think it's a better way of saying, hey, give me $20 to come to the event. It's bring a $5 toy, bring a Beanie Baby, bring a can of corn or something, and then we like to do that. And then in December for the Toys for Tots, we also do the monthly event in December. We take everybody out. We'll go to a local restaurant or bar, and everybody that comes to our events, all our investors are completely invited, and it's 100% on us.
Wow.
So, we bring everybody out, we give everybody, hey, here's your ticket, you get one drink on us, stay here, network, enjoy. So it's just an event that we started because, there's a lot of stuff out there that's not real, and people are selling something or they're not really doing the right thing. So, we wanted to put a platform out there for people to learn for free, realistically. This event tonight is actually the first event that we video. And we're going to start making this content online available. We're going to probably Facebook Live it. And it's something that we're building to, because I think in today's market, education is extremely important. And there's a lot of resources that are free. And I think it's important to hear that, whether you want to pay for education or not, that's completely on the individual. But, we do an event once a month. We're going to have a podcast here shortly. We're going to start live streaming these events. So, we're trying different things and just trying to reach, the most amount of people we can.
Yeah, I like it a lot. That's awesome. And I see that you like giving out a lot of education and advice, and especially, stuff that you learn across the way. You have done from the beginning all the way to the end. So you have a lot of advice to offer. Speaking of that, is there stuff that you would have done differently, or kind of pitfalls, or some, tips that you can give us to the investors?
I joke around. We've been very successful. Our deals have done very well. But if I knew what I knew now when I bought my first property, it would have done twice as good. And sometimes I sit back and say, I wish that property would come into my inbox now, because I would know exactly what to do. So we definitely learned trial by fire. Now, all the investors knew what we were doing when we were getting involved. They knew that we were newer sponsors, so on and so forth. So they've learned with us. But if you're not learning, you're not growing, that means you're not taking risks or calculated risks. I would say the biggest tip that I can give anybody is don't be scared to do it, right? You're going to make mistakes. No, when I joke around, the two things I say all the time is that no deal goes A to Z completely straight up. It has its ups and downs for sure. And then simultaneously, the more people the more networking, the more podcasts, the more events you go to, the bigger your database becomes, the quicker you could correct a problem if you know the right person to call. So we learned a lot. We've learned, do a double lease audit. Like you lease audit the property on due diligence, but then you close 60 days later. a week before the property, do another audit, like walk the vacant units. Just, double check your work so when you close and your money finally goes into the deal and you go take out a loan, there's not going to be a surprise. The last thing you want is a surprise. And we've learned the hard way. We had a property that we bought that we had to evict 56 tenants out of 240 because through contract, they just stuffed the property. And, it's the nicest property we own. It's 1990s construction, Class B plus. It's a beautiful property. And for 2 years, it struggled, but we finally cleaned it up. And now we're 98% occupied and spitting out cash. But the first 2 years were a little rocky. Now, ever since that lesson, on every deal we do, we make sure we have a case study, and we say, okay, let's not make this mistake again. If you make a new mistake, that's fine. It happens. Just don't make the same mistake twice, because that's shame on you.
Yeah, absolutely. So, Toro, did it come from somewhere? Was it inspired by something? How did you guys come up with the name?
It was me and my partner. We're both born in April. We're both Italian. It's bull in Italian, and April is if you're astrological sign. I had no idea about this. We were just talking, and he's like, let's talk about animals and let's look this. So I was just like, okay, April birthdays, animals, and I saw Taurus. Okay, Taurus, bull, Toro. So that's how it came together. There was nothing behind it. It was just we were he wanted like a lion and a dog, and I'm like, I don't think that's gonna work. Like so. We did something different. We don't have a picture of a bull, but it was just messing around. Do I love the name? I'm impartial to it. I think that it works. It serves its purpose. It's a little brand. I think our logo is pretty cool, but there was nothing behind it. No, no rhyme or reason. We were just messing around.
All right, cool. So when you're not working, I know that you're putting a lot of hours in each day, but when you're not working, what are you doing?
So my daughter was just born a month and a half ago. So the 26th of April will be her 2-month birthday. So for the last month and a half when I'm not working, I'm she's only a month and a half, but I love playing with her and messing around. But yeah, my first daughter. So it's been a really fun month and a half. But other than that, I'm a pretty simple guy. We have a house upstate. I like to go up to the lake. We have a little ski nautique, so we'll ski, we'll wakeboard, have a couple beers, hang out. Huge baseball fan. The Yankees are. My wife said, do you like your daughter more than you like the Yankees? And I said, of course I do. Like that's an easy one. But no, I think, I like to, spend time with my wife, spend time with my daughter, low key, hang out, hang out in the backyard, watch the Yankee games in the summer, go upstate. And in the winter, I like to go skiing, I used to ski for Okemo up in Vermont, but I like to go out west, once or twice a year. Go out ski vacation with a couple guys, a couple friends, and hang out and just do that. But other than that, pretty simple. No, not too much fun.
Yeah, well, simple is always best. I got 2 kids of myself, to my own, and it's I work from home, so I see them all the time. So like I said, family is very big and important to me. So that's awesome.
Same thing.
So any books that you can recommend? I always like asking the same question. I have like a huge library, and everybody that recommended, I pick it up and always suggest it to the audience.
Yes, I would say, I'm pretty, I'm, all the regular ones that you see, the ones that everyone talks about. I'm an audiobook guy, if anything. Do I read as much as I'd like? No. Do I listen to as much as I'd like? No. But, I think, there's a million books out there. There's no one that sticks out to me. The one that I'm getting through now is Never Split the Difference. It's good. It's about negotiating. I think negotiating is extremely important. It was written by a former FBI interrogator. So it's pretty powerful. I think that negotiation is everything. Whether you subliminally, you can make people do a lot. You can never make someone do something they don't want to do, but the way you say things is extremely important. So I would say that's the one that I'm listening to now. It's really, powerful. I've recommended it to everyone in the office to read. But that's the one I would talk about now. But other than that, all these real estate podcasts and all the event, everyone talks about it. If you're getting involved in real estate, pick up a book and read it. I think, on not the real estate side, the CEO of Nike wrote a book. It was another awesome book. It was called, what's it called? I read it a couple months ago. My uncle recommended it to me, but that was a good one. Reading books about, from successful people, just to hear their story is always a cool thing. So, stuff like that is also something I do like to listen to.
Yeah, I like reading, autobiographies and kind of seeing what their routine is and kind of what they do, and then I try to mimic that. So, do you have a specific routine that you do every morning that you stick to?
So right now with my daughter, my routine is on her schedule. But what I like to do, I'm an early riser anyway. I'm typically up. Now my daughter's waking up at like between 5 and 5:30. I'm normally up right around that time, so it's not a problem. But now the routine's changed. It's feed the baby, change the baby, play with the baby for a couple hours before my wife wakes up, give her a couple extra hours of sleep, and then I would say, I used to go to the gym in the morning. That's, the last month and a half been a little bit harder. But that's normally what I like to do. The other thing I like to do is I like to write down my whole day in the morning and then at night, just so I know that everything that has to get done gets done. That's a big thing. I believe in that. Lots of pen and paper. This is what I got to write down. This is what I got to do. Start with the hardest thing of the day and work your way off of that.
Yeah, my next question was kind of what you kind of answered already with your daughter, but I was going to ask, what are you most grateful for?
That's right there. Wife and daughter and my family. My mom, my dad, my brother, my wife, and my kid are probably the highest up on the list of, what I'm most grateful for. My parents gave me the best life that I could possibly want as a kid. So the reason why I do what I do is, hopefully I'm able to give them the life as they get older that they gave me. That's why I do what I do. That's the only reason why I do it. I don't care. I could be a billionaire. I can make 50 grand a year. It's irrelevant to me. The most important thing is just being able to provide for my family, my wife, my kid, my family, my immediate family, my brother, mother, and father. That is everything. I joke around, but I don't really joke around. The Yankees are also really important. When they lose, it frustrates me. It makes me upset. I can't sleep. So, but no, they're that's it. Those are that's the things that for me, it's family. That's it.
So it's very cool. And like I said, I love talking to other investors, people that have similar backgrounds and stuff like that. So that's awesome. Last thing is people that want to connect with you, go to your meetup groups, send you deals, be an investor. How do we get in touch with you?
So the easiest way, if you go to Toro, ToroRep.com, there's an investor questionnaire. You could click that, fill it out. You'll typically get a call from myself or our operations manager within typically within 48 hours. That's the quickest way. Email is the best way. If someone sends me an email, it's john@ToroRep.com. You have it. You could send it out. If someone sends me an email, I will give anyone 10, 15 minutes of my time. If you just send me an email, I need to talk to you now, I may not be able to, but typically if you give me 48, 72 hours, I promise anyone, 10 to 15 minutes of my time. If they have any questions, it takes no effort whatsoever. I got a lot of help getting to where I am just by, people I knew just by giving me the time. So I feel that it's, absolutely important to give everybody, whether it's a super sophisticated investor or someone that's never done anything, shoot me an email, reach out to us on our website. I will typically respond with my cell phone number or just for easy communication. After I speak to someone, it's pretty simple, whether it's a text, email, or call. I'm pretty readily available. Our office is in Jericho, New York. If you're ever around, you're more than welcome to stop by the office. Our meetup group is online on meetup.com. Anyway, if someone wants to do smoke signals and carrier pigeon with letters, I'll try it. I'll test it out. Why not?
Awesome. Yeah, I really appreciate you giving us the time. I know you got a busy schedule. You guys doing a lot of big things. So I really appreciate you taking the time. I look forward to connecting with you in the future. I'm in Connecticut. Hopefully, look forward to going to one of your meetups or meeting you at your office one of these days. So thank you.
Absolutely, brother.
For talking to us.
I appreciate it.
Appreciate that. And, best of luck for the rest of this year. And we'll talk soon.
Same to you, man. I appreciate it. Thank you very much for having me on. And it's been a pleasure.
Absolutely. Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.